In the metals quadrant, taking a look at the February gold contract, which jumped over 2% today, getting back to levels last reached on January 3rd and reversing in part 5 straight sessions of losses. Now, we got up as high as 2067.30. That was up 2.38%. The low, 2033 and 10 cents, was actually a gap higher of almost 0.7% from yesterday's settlement of 2019-20. And we ended up coming into the late day still up about 1.5%, maybe a little bit more than that. On the week, gold recovered, but still finished negative by just short of 0.1%. It recovered about 1.42% of the weekly loss that it had built in. Now, PPI came out today and it contradicted yesterday's stronger CPI data, which is part of the reason gold got such a bid early. US PPI month over month came in at down 1%. The core came in flat versus a forecast of up 2% and a previous of flat. And the year over year core and headline were both lower than expected. Both the headline year over year measure was revised last month a little bit lower, and this directly contradicts what we saw in yesterday's stronger CPI report. Although CPI does tend to follow PPI 1 to 2 months later, it's only if PPI is in a consistent trend one way or the other, and one batch of PPI data certainly doesn't make a trend. On top of that, rate cuts are being priced back in at a more aggressive pace. The markets are now pricing in, as of this morning, 7 rate cuts next year starting in March, and that would be 25 basis points each month. So that would be a total of 7 or 350 basis points in cuts. That could obviously happen in stages if it were to end up being correct of 50 basis points here, 75 basis points there, 25 basis points. But either way, the market's pricing in 350 basis points of rate cuts, as the highest probability, not necessarily as a fact, just the highest probability of the way that the markets are priced out right now. Now, if that happened, that would be a very big tailwind for gold. A lot of experts are saying that's a little too aggressive.